Morning, everyone. Welcome to Hit the Bids Week 26 Market Watch here on June 29th. Today we're going to take a look back at last week's action where we saw equity markets back at all-time highs. This cattle market seems to have found its footing, and oil prices have forgotten all about the situation going on over in the Middle East. Lots of interesting action to take a look back on and see how it's going to help us navigate these markets as we head into Week 26. So that being said, let's jump right in here, starting off with our August live cattle. Over the past couple of weeks, we've seen a nice structured pullback off of this recent all-time high at 220 in the fat market. Price pulling back in a nice orderly fashion until last week we found a good support level here in all the right spots. It's raising 50-day moving average as well as this demand zone around 208, offering good buyer support. Price balancing out for the first 4 days in a loose $3 to $4 range before getting that nice breakout on Friday, which looks to be confirming this next leg higher. Really rewarding all the dip buyers over the past week. This market looks strong and healthy, and we should see this next leg higher back towards all-time highs continue. Let's take a look here on our lower time frame. We did see prices pulling back in a nice structured fashion over the last 3 weeks, riding this downtrend line, and then starting to level out here right around the 208, 209 area. Last week we had a nice back and forth in this sloppy $3 to $4 range. We did take out some of these prior day highs and prior day lows, just showing a nice back and forth action. Nice liquidity grab here, poking down below Monday's low into this point of control that started this last leg higher towards this all-time high. Showing good support over here at 208 last week. Price bouncing off of there and then coming to a point here, really tightening up with this nice high concentration of volume here right around 209. We did see Friday's action break out and really never look back, opening range printing and pushing higher all day long, rallying a little over $4 towards this 214 spot. High of the week and Friday's high at 213.67 is our bull pivot as we head into week 26. Bids above that, we should see this market snap right back up towards this 216 level. Over the last couple of weeks, we've seen 216 be a major level of support and resistance, offering good support during the week of this all-time high, as well as the breakdown point for this recent pullback. This 216 mark should act as a magnet. We do expect to see this price get pulled right up towards it early in the week. From there, we might see a little bit of resistance, but this big picture uptrend is rolling, getting back on track here, and we do expect to see this market push back towards all-time highs. This is just going to be the first spot we want to keep our eye on, as that has been a key level over the past few weeks. Above there, we should see this market just cut right through this range up to 220 at this all-time high, and from there head into uncharted territory back towards all-time highs. Good buyer support last week, good healthy action here in this fat cattle market. All signs are pointing up here as this market looks strong and healthy, and we should see this upside to continue. Look for the buyers to keep pushing this market back towards all-time highs. As we head down the line, this market showing good support at that 50-day moving average, all the way down into those early 2026 contract months as well. Showing good support down the line. This market looks healthy, and the upside should continue in the near term and throughout the rest of the summer. Jumping over to the feeders now. Same story over here, showing good balance action all week long off this recent pullback from all-time highs. Price not quite reaching that 50-day moving average, showing good support here right at the $3 mark. Might not see prices below $3 again for quite a while, so at the moment this market looks to be rallying. Once again here we can take a look on our lower time frame. Price just consolidating, coming to a point here, really building up some pressure between 302 and 304 before getting that nice breakout on Friday, rallying up towards 308. This 308 is this last Friday's high as well as this most recent Friday's high. Look for any bids above there to really get this ball rolling back towards all-time highs. This feeder market looks strong, showing good support from this uptrend line as well as all of our major moving averages. Good support here. Look for the upside to continue as this cattle market remains strong and healthy. We can go down into these back months. Late 2025, early 2026, showing the same story all down the line. Good buyer support, showing nice, strong, healthy market in the near term as well as the long term. Look for the upside to continue, and look for both feeders and fats to be pushing back towards all-time highs and into uncharted territory here in the next couple weeks. Cattle market remaining strong and healthy. Let's jump over to the corn futures now. Last week we did see rollover from that July contract into December. Here, for the time being, we will be focusing on this December contract as July has fallen off, and this will be our focus as we head in all the way towards the end of the year. This December market was a little bit more rangy over the past few weeks to months, trading between 434 and 456 for the majority of this past 3 to 4 months of worth of action here. Last week we did see price just pushing lower all week long, opening up here on the highs and driving lower for the first 4 days of the week. Really breaking down below this 434 level, which was a good support point, dating all the way back to May here. All these multiple touches down here showed this was a good potential spot for a break, and that's exactly what we saw. Good resistance the prior week up here at this 50-day moving average, as well as this downtrend line. Price opening up here just below the 50 and driving nearly 30 cents lower to new contract lows last week. We did see price hit some of these overextended levels here at new contract lows, balancing out on Thursday before offering what looks like the beginning of a little bit of a relief rally here. Big picture downtrend still remains intact. We do expect over the long term corn prices to continue getting cheaper. However, at the moment, we are just coming off this recent breakdown to overextended levels, oversold levels. A little bit of a relief rally here. If we continue to get bids above 428 here in the new week, we should see price push back towards this breakdown level where resistance will be expected to step back in. Lots of, this declining 20-day moving average should probably be meeting up with price somewhere in the low to mid 430s. This is going to be a spot where we expect to see resistance step in and the bears start to sell this market again and push it back down towards the lows. But at the moment, we could see this relief rally get underway, but look for rallies to be sold into and the bears to see good opportunities to get short once again up in some of these levels as we expect to see corn prices continue to get cheaper as we get deeper into the summer. Over to the crude oil market. Last few weeks, we've seen lots of excitement here in the oil markets, given the situation over in the Middle East. Price breaking out about 3 weeks ago here above 64, offering a really nice entry point for this recent rally. The news was announced here with the Israel and Iran bombings, as well as the U.S. getting involved the prior weekend. However, this rally was over before it started. This market breaking out here off this nice technical break above 64, and then using the news announcement from the so-called escalation over in Iran as a good selling opportunity. This market rallying up and pushing almost $15 off of this peak here, off the Sunday night open from last week, driving all the way down and then just camping out here right in the mid-60s. Price giving back everything that it gained over the past 2 weeks and then just hanging steady here at around 64, 65 bucks. Building up a lot of pressure here with Wednesday, Thursday, and Friday's action, just kind of consolidating here, balancing out right around 65. This is a spot where prices either traded above or below over the past 6 to 8 months. Price hanging steady on top of it from all last year and the first quarter of 2025, and then tariff day breaking us down and having us trade below it before reversing back above here. So at the moment, this is kind of a key level where we could see a nice little snap either direction. Below 64.5 here, we do have a lot of volume being built up here late in the week. If we do get offers below 64.5, we do expect to see this market just snap right back down towards 60, and then from there we could see this 55 level come back into play. And if we do get below 64.5, we do expect to see a downtrend kind of take place from there, or push down, just play it level to level. But at the moment, price is just kind of getting comfortable here in the mid-60s. Following all this recent volatility, we don't really expect an increase in that. We just want to see this market continue to digest this move. We should see this crude oil market get quiet again and settle into a nice tight range. If we do get above 66.5, we could just trade in the 66 to 72 range, which this crude market has really liked over the past 9 months here, 6, 8, 9 months. Price just hanging steady in that 66 to 72 area. We very well could see this continue to play out here as well. But as we head into the new week, we just want to see this market really get a nice confirmation above 66.5 or below 64.5 to confirm either this range trade up here with a neutral bias or a breakdown below 64 should get us into bear territory and pushing this market lower. And from there, we should just go level to level down to 60 and potentially 55. Now over to the equity markets. Nice support all week long. We did see price opening up here on last Sunday night's open here in the futures, showing good support at this rising 20-day moving average, and seeing 5 green days in a row, pushing higher all the way up into new all-time highs. Both the S&P and Nasdaq driving higher all week long, finding new all-time highs, running into uncharted territory. We should see this market continue grinding higher. Nice low volatility grind as this market looks healthy and strong. We should just see this market slowly keep pushing up into these all-time highs. The Dow futures here still a little off of these all-time highs, but breaking above this 43,000 level, which has been a key spot to watch over the past few weeks. This really confirming this Dow market push, or this Dow index pushing back towards all-time highs. We should see that continue. The S&P and the Nasdaq should keep pushing into all-time highs as well. We are a little bit getting into a little bit of overextended territory here, but with this nice low volatility grind, wouldn't be surprised to see this just keep drifting higher. As this equity market remains strong, nothing really standing in its way, just a good healthy uptrend from here, showing a nice healthy market environment. We do have some news this week. It's going to be a short week with the 4th of July coming in on Friday and an early close on Thursday. However, we do have Fed Chair Powell speaking here on Tuesday morning, as well as non-farm employment information coming out on Wednesday and Thursday as well. So those are going to be some reports that we want to keep our eye on before the market open on those days, and those could offer some volatility or some movement, but nothing really unexpected here at the moment. This market remains strong and healthy. Look for it to keep driving into all-time highs. That's all we got for this week. We'll see you tomorrow for closing comments. Everyone have a good night.